Good morning, everyone. Thank you for joining this week's Atram webinar. I will be your host, Ivan Ante, Multi-Asset Portfolio Manager here at Atram. Today, we have a very special guest who is one of the biggest proponents and pioneers in the digital asset space in the Philippines. And we are very lucky to learn from his accumulated knowledge and experience. But before anything else, this webinar will be recorded and be available on our YouTube channel, Atram Studio. Please like, share, and subscribe to our YouTube channel and hit the bell icon to get notifications on all of our videos, including webinar replays. We have a Q&A portion before ending the webinar, and we would love to entertain all your questions. You may ask them by clicking the Q&A button below your screens. Feel free to ask your questions throughout the webinar. Please stay until the end for a quick feedback survey. Nichel Gaba is the founder and CEO of PDAX, where he advocates the use of the innovative technology in making financial services more efficient and accessible. Prior to PDAX, Nichel was a career investments professional. He was vice president and head of corporate trust for HSBC Philippines and held various roles in investment management, trading, and securities custody. Nichel graduated with an MBA from the Wharton School of the University of Pennsylvania and is a CFA charter holder. Welcome to our webinar series, Nichel. I'm really looking forward to your presentation. You may now have the floor. Please feel free to share your screen.
Thank you so much for that kind introduction. I hope that everyone can see my screen. So like many of the organizers in this call and perhaps some of you in the audience, I was a career finance professional. I came from the traditional investment side, and so when Bitcoin first came along, I also had the same skepticism and also the same curiosity about what Bitcoin is. Naturally, Bitcoin has evolved a lot since then, and I'm looking forward to share a bit of what I've learned over the past few years about Bitcoin. Just some reminders from PDAX as presenters. The opinions and views that will be shared in this webinar are my personal views and opinions. They're not representative of PDAX. And also, our intention with this webinar is not really to get you to buy or sell Bitcoin, but just to have an understanding of what Bitcoin is. Basically, this is probably how we'll proceed. I'll start with a bit of introduction about Bitcoin, its history, how it first started, how it works. So this will be a lot of basic stuff about Bitcoin. So if you're already sitting on a pile of Bitcoin, congratulations are in order for you. But this first part might be a bit repetitive for you. And I'm also going to talk about how Bitcoin was valued when it first started, or in its later on in its earlier days, and how it's probably being valued today. And then after that, we'll discuss a bit about this new narrative about Bitcoin, this new moniker of Bitcoin being digital gold. What does it mean, and how is it relevant to our personal portfolios? And then last, we'll discuss probably what's ahead for Bitcoin and maybe the other cryptocurrencies, given the changing dynamics of the market environment. So let me start by defining, I guess, what Bitcoin is. And this is probably the easiest way that I've explained Bitcoin to most people. Bitcoin is the world's first digital bearer instrument. If we think about bearer instruments today, the best example is probably cash, right? A bearer instrument is one that entitles the holder to ownership and control, right? So if I hand 100 pesos to somebody, automatically that somebody becomes the owner of the 100 pesos that I just gave him. The problem is that since the start of the digital age, there hasn't been an effective way to transfer something of value without an intermediary. In other words, in the digital age, you cannot really have an instrument move around like cash without a central authority or third party. That was actually the rationale for why Satoshi Nakamoto created Bitcoin. So he wanted to create a digital form of money that's fully peer to peer without any central authority. Who is Satoshi Nakamoto? Today, we actually don't know who he or she or they are. It could be a man, a woman, a group of persons. But all we know is that Satoshi Nakamoto wrote this paper on Bitcoin back in '09 and has since deployed Bitcoin. And right now, uh, largely the personality is irrelevant, right? Because Bitcoin itself is has been deployed, it's self-sustaining, and to a very real extent, nobody controls Bitcoin anymore. Now, why is Bitcoin so special, right? Bitcoin is so special because it solved the double spend problem, right? I can send digital currency or digital instruments to a person, and there's no bank, there's no middleman, there's no ledger that can be corrupted that will dispute the transaction I'm making. This is a problem with, if you think about uh, transacting in or initially when we were transacting in digital money na if I send $100 to this one other person, what's to stop me from sending that same $100 to somebody else? So Bitcoin solved this um, by creating a network of nodes that validate the transaction, which I'll discuss in the succeeding slides. So initially, it started with very, very minimal adoption, right? It was largely a novelty item. But today, Bitcoin is traded globally and is actually one of the most widely traded and most liquid instruments in the world. Okay, so how does Bitcoin work? I mentioned earlier that it's so easy to uh, transact using Bitcoin without a third party, right? And how it works is essentially it's like email, right? In email, you have an email address and a password. Well, with Bitcoin, you have wallets with your private key and your public key. Okay, the public key or the public address is kind of like the email address, right? That's what you give to people so that they can send you Bitcoin. And the private key is what you use to access the wallet and be able to send transactions or sorry, send Bitcoin to somebody else. Here's a quick illustration. um, so let's say this wallet wants to send 1.2 Bitcoins to this wallet right here. All this wallet holder has to do is type the public address and then key in the amount of Bitcoins to be sent. And what happens is this transaction gets validated by nodes all around the world. So what are these nodes? Well, these nodes, you can think of them as computers supporting the Bitcoin network. Now you might wonder, okay, so it's being managed by a group of computers. We don't know who they are. How can we make sure that these are secure and that they will validate the transactions? Um, so these computers actually are being rewarded for supporting the Bitcoin network. Anytime that a block gets created, or in simpler terms, anytime that a series of transactions get processed on the Bitcoin network, the nodes get rewarded with more Bitcoin. Okay? So this process is called mining. I don't know if you've ever heard of Bitcoin mining before, but all it means is that you're providing computing power to the Bitcoin network so that it can authenticate transactions. Now, Bitcoin itself is open source, right? Like you can review it, you can make sure that it's secure. And over the past 10 years that Bitcoin has been up, obviously you can imagine that a lot of people have looked into the code itself and have found it to be secure. Other important features about Bitcoin, and maybe depending on how familiar you are, these might come as a surprise. But Bitcoin is made to be scarce, right? It's computationally scarce. There can only ever be 21 million BTC to be mined. Okay. Is there a way to cheat this? No, unless the rules of Bitcoin are changed, which requires a majority of the nodes supporting the network to actually withdraw computing power. So it's definitely a very unlikely event. The way that Bitcoin is written now is that computationally there can only be 21 million Bitcoins in existence. Um, Bitcoin is also very divisible. You can divide one Bitcoin into 100 million pieces. So if last year you were saying that shocks Bitcoin is worth three or $4,000 each, I don't want to buy because it's too much money. Actually, you could have bought fractions, tiny fractions of Bitcoin. Uh, it's also highly portable, right? In the sense that all you need to do is a device that can access the web and internet access, and you should be able to access your coins on your Bitcoin wallet and transact. Now, I mentioned earlier that in the earlier days, Bitcoin was espoused as a new form of currency that's not controlled by any monetary or any central authority. And in the earlier days, that's how Bitcoin was perceived. That it's another form of money, and this, in effect, probably led to an understanding of how Bitcoin was supposed to be valued. Now, let's think about how we value currencies today and examine how that relates to Bitcoin and its earlier valuation models. Currencies, as you know, are instrumental goods, meaning they are valuable because they give me access to some other good or service. A 1,000 peso bill is valuable because you can go to a shop across the street and procure with it 1,000 pesos worth of goods and services. If that right to exchange 1,000 pesos for goods and services does not exist, then probably the value of that piece of paper is exactly what it is, just a piece of paper. Um, Now, so thinking about it on a more macro level, what's the value of the Philippine peso? Well, the value of the Philippine peso has got to be somehow equivalent to the value of all the goods and services that can be procured with the peso, right? Notionally, that makes sense because the Philippine peso is legal tender in the Philippines and you have the right to use it here. Before the 70s, currency was pegged to gold, right? So, in other words, a unit of currency is fixed to a, a unit of gold. And in many circumstances, they're actually exchangeable, right? So it was very clear then that if I had X amount of cash, there's Y amount of gold backing it. But since the 1970s, we've moved on to fiat currency, which means that the the notes that you're holding legally entitle you to goods and services in that jurisdiction. Now, so there's a use component to valuing instrumental goods, meaning you can value it based on what you can exchange it for. But there's also a growth component, right? If people expect that the Philippine peso will be widely used in the future because the let's say the underlying goods and services that can be purchased using the peso expands, then you should see some pressure for the Philippine peso to appreciate. Obviously, there are many more complexities at play in valuing a currency, right? The FX markets are much more sophisticated today than they were before. But thinking about that valuation approach and applying it to Bitcoin, then you have a starting point, right? Bitcoin's initial value or its value in the early days was largely because it was being exchanged within niche groups, right? So enthusiasts who were exchanging Bitcoin amongst themselves for goods and services, and it was being held as a novelty item that people are actually willing to pay for. The one of the landmark transactions in Bitcoin was the two pizzas, right? So actually, in the crypto world, Pizza Day is an annual holiday that's being celebrated, and that just marks the day when somebody said in a forum that, all right, I'm gonna buy two pizzas for 10,000 bitcoins. Who wants to deliver two pizzas to my doorstep? Okay. Anyway, 10,000 bitcoins is worth about $200 million today. So you can just imagine that whoever that lucky person is uh, made it big with Bitcoin. But obviously, those were Bitcoin's early days, right? Another use case that emerged for Bitcoin, and probably this has also become quite controversial, is that because it's money without central authority, it's also money that cannot be frozen, money that if you don't really disclose your identity and just stay and just have a public key tied to your quote unquote account, nobody will ever know who you are. So think about it as numbered bank accounts or bank accounts with no names and no bank, right? So or like an email address that you just use to remain anonymous. Right? So Bitcoin is the same way. Wallets themselves only carry alphanumeric strings as public addresses, and you don't really know who owns it. Right? Later on, I'll talk about how the regulatory frameworks have also advanced in such a way that this is likely not going to be a concern going forward. Fast forward a little bit, you see this. You're gonna see this spike here in Bitcoin prices beginning 2016, 2017. What was this? Well, uh, the understanding of blockchain technology, which is the technology on which Bitcoin was built, the understanding behind blockchain technology also evolved, right? And there were new protocols that came up, and alongside these protocols, all sorts of new cryptocurrencies were being created, right? And in 2016, 2017, you had a lot of people, a lot of tech enthusiasts, a lot of startups issuing their own currency and selling them on exchanges everywhere in the world. And obviously, because it's so easy to quote unquote list and sell tokens, a lot of money was made just by creating new tokens and selling them in the open market. So a lot of the hype, arguably before 2017, was driven by the fear of missing out on that next new coin, right, or FOMO. Obviously, the narrative has also changed since then. And today, the narrative around Bitcoin is that it's somewhat of it's taking on the features of digital gold. Um, Today, the market cap of Bitcoin sits at around $300 billion. It's still small relative to the global markets, right? So I don't think that this even hits 10% of the balance sheet of something like Citibank. But obviously, it's no longer the enthusiast novelty item that it once was. Now, this slide is 3 days out of date, right? Bitcoin price here was still 19,300. Today, it's in the 18,000 level. Just to show you how volatile Bitcoin prices still are, because it's still an emerging financial instrument. Daily trading volume. Now, these numbers are somewhat disputed because you actually don't have a central body that regulates or requires global transparency in Bitcoin trading, right? So the daily trading volume numbers are somewhat disputed, but there's general consensus that it's at around $3.3 billion per day of daily volume. Okay, now let's move on to this narrative of digital gold. Why gold, right? Like, well, um, the comparisons between gold and Bitcoin are actually very well founded because gold itself actually went on its own narrative shifts, right? So I'll show you this slide that depicts the uh, price that shows the prices of gold since the 70s. So obviously, post Bretton Woods, once we all moved into fiat currency, there was a lot of uncertainty around what gold is used for, right? Like, what am I gonna like? Why is it still valuable? One of the early, I guess, use cases of gold back then, um, and this one made relevant largely also because of the oil crises in the 70s, was it allowed governments, it allowed institutions to hedge against the ill economic effects of the oil crisis, right? If everyone is pessimistic about economic prospects globally, then probably the bet is just to preserve purchasing power, right? And because the understanding of gold is that it's a scarce instrument, and that still central banks around the world are going to pay some amount for gold, then it might have been a good hedge instrument. Obviously, you see another massive uptrend here. Big towards the end of the 90s. Obviously, we had also had currency-induced crises at the time. Speculations against local currencies that cost um, uh, uh, in some cases economic meltdowns. Um, but this uptrend here, um, I would argue that it was also largely because of globalization, right? That because markets around the world are becoming more dependent on one another. Companies are more exposed to the global trading environment, importing more, exporting more, supply chain globalization. That the effects of contagion in case in case we suffer one crisis in the local market, the effects of contagion are much more real today than it ever was, right? And that fear of global contagion in times of a crisis uh, pushed a lot of interest towards something like gold, which is not just a scarce instrument, but it's also a globally traded instrument, right? To the point that if, for example, I'm no longer super bullish about Philippine equities or I don't think that there's going to be a lot of growth over the next 5 years. I just want to preserve my purchasing power because I'm also worried about inflation. I might go to property, right? But property itself is also not fully immune to local political risks, right? So um, there could be a scenario where the peso depreciates so much so that even the property that I acquired loses its value, right? So there are imperfect instruments, or there are a lot of instruments that hedge or that provide a safe haven to certain risks, but definitely not every instrument can act as a global hedge or a universal hedge. Um, Now, today, obviously, today we're seeing the effects of the COVID-19 pandemic and the sentiments around the world are that, okay, equity markets, are high, but probably the valuations don't make as much sense anymore. Um, uh, Governments all around the world are having to spend much more money to combat COVID and its effects. So there are fears of unwanted monetary expansion, which could lead to more inflation. And you also don't know how much economic scarring there is, right? Uh, a lot of governments have imposed lockdowns, and it might not, and it just is difficult to tell if economies are able to bounce back that quickly, right? So in this environment, we're worried about a lot of things, and because COVID um, is a global threat. Uh, the fears of how far these effects could go are also super uncertain, and so something like gold becomes more attractive just because it provides us the ability to hedge away any country specific risk, preserve our purchasing power because it's scarce, and it's also very liquid globally, right? So I won't have any concerns around selling gold. Now, if you look at these features that make gold a good global hedge, right? They also largely apply to Bitcoin. So what's common about Bitcoin and gold is not just the fact that they both started as currencies or currency-linked instruments, but that today they have properties that make them ideal as a global hedge. Uh, so first, they're scarce, right? Probably the only other scarce item or asset class on this list is real estate, because we don't make new land anymore. But real estate also suffers from other uh, deficiencies that make it not suitable as a universal hedge instrument. Purity is also a concern, right? Like with gold, what's good is that there are chemical ways of testing whether uh, testing the quality of gold. But I think that on a purity standpoint, gold is far less pure than Bitcoin in the sense that you can mix gold with other precious metals. You have different grades of gold. Whereas with Bitcoin, as long as you have Bitcoin and it's on the blockchain, uh, whatever you hold is the same as what everyone else holds. Extreme liquidity is another thing that I would point out. A lot of these instruments obviously are liquid, right? Equities are liquid, but only insofar as they trade on the local exchanges, or if they're dual listed, fine, then they trade in other countries as well. But they are not as liquid as Bitcoin, that's traded virtually everywhere. So much so that it's also traded peer to peer. Gold is also obviously traded everywhere, but probably where gold lacks here is its ability to access the retail segment as much as the institutional segment, right? Storing gold is obviously expensive, and not every market in the world has a gold market. Um, in the Philippines, for example, probably our biggest market for gold would be as collateral for lending, right? Pawn shops are probably our best alternative to an actual gold market. Global accessibility. So as I mentioned earlier, Bitcoin is accessible pretty much everywhere uh, since the day that it was created, and that's largely because it's a development uh, of the technology of its time, whereas gold needed millennia to become globally valued and globally accessible. Uh, Obviously, there are concerns around how effective gold and, by extension, Bitcoin is as an inflation hedge, right? Because they don't really produce anything. They don't produce yield. They don't participate in the real economy in the same way that equities, for example, do. So companies in periods of inflation, obviously, they can increase their prices and somewhat insulate themselves against inflation. Um, but uh, because Bitcoin and gold are scarce, you can expect them to, at a minimum, preserve their purchasing power despite what happens on the monetary policy side of things. Staying power is also something important as we look at the value of gold, right? It's always been there. In fact, some national charters or laws actually require market making for gold, right? So it's very, very difficult to dislodge the place of gold. Whereas for Bitcoin, which is probably a 10-year old instrument at best, it remains to be seen how much staying power it has. But because it's widely used today, or it's widely held today by the retail segments, then it's also very unlikely for us to dislodge Bitcoin, I would say, anymore. So what are the next milestones for Bitcoin, or what we're trying to call now digital gold? Um, Now, a lot of uh, a lot of the early hype around Bitcoin, or the early narrative around Bitcoin, did not pass. They did not pass financial or economic scrutiny, right? Was it the ideal form of money? Probably not, right? Because if we see money only as an instrument that needs to be exchanged peer to peer, then fine. But money is much more than that, right? Money needs to grow alongside the real economy so that it's not a perpetually deflationary instrument, meaning it shouldn't always go up in price over time, right? Because if an instrument goes up in price over time, the economic incentive will be to hold the instrument, right? And the economy grinds to a halt because everyone stops spending money. So maybe it's not the ideal form of money. Um, People were using blockchain technology to create all sorts of instrument and creating a lot of wealth in the process. But then you had legal and regulatory setbacks, right? And rightfully so. People were selling securities, and laws exist to protect consumers from from being scammed out of these ICO tokens. Uh, but what's next for Bitcoin? This environment actually helps Bitcoin in that it has a place in an environment where we want to be hedged against global risks. Uh, Gold is not as liquid or as accessible everywhere, and so people would need an alternative. And gold and Bitcoin is fulfilling that need. Um, next steps for Bitcoin is likely to involve institutions. While Bitcoin has been super powerful already at the retail level, uh, we still did not have the institutional ecosystem around Bitcoin for it to be bought and sold by banks, professional fund managers, or traders, right? But that is also changing since 2018, and this is probably the very first instance where uh, a globally recognized financial institution decided to support Bitcoin. Fidelity launched its digital asset services business arm that provides accounting and valuation, custody, and trustee services for cryptocurrencies. And then fast forward, pretty much every global institution today are either applying blockchain technology in house or are starting to support digital assets. Um, uh, Closer to home, maybe 2 years ago, the central bank saw how beneficial cryptocurrencies can be to the remittance space and created rules to support it. Um, the SEC are seeing potential in blockchain technology for capital markets applications, and now we're seeing draft rules to support trading of actual digital assets. Um, and we also see banks starting to adopt the use of Bitcoin or supporting the exchange of Bitcoin. DBS only 2 months ago announced that they were launching a digital asset exchange that trades Bitcoin against the Japanese yen, the Singapore dollar, the Malaysian ringgit, and so forth. Um, 2 days ago, we saw the same announcement by Standard Chartered, right? So there's definitely a lot more institutional adoption as Bitcoin matures as an asset class. We're gonna see more coverage, more investment advisory, and hence more institutional participation. So thank you very much for your time. I'm gonna pause here in case you had any questions.
Thank you, Nichelle. They say that one of the signs of a great book is when you read it and but you keep learning new things, right? And I think that your presentation was like that. You keep on getting new nuggets, even though I've read about bitcoins over the years. So, to our audience, please keep the questions coming if you have. But I'll start it off, Nichelle, if that's okay with you, with a
Sure.
non-technical question, because I've been wondering since you've said that we know that you've been from a traditional finance background, what were the reasons really why you transitioned from that banking career to starting your own business and dealing with a relatively novel asset class? That's quite a
Uh,
huge leap.
wow. Okay, that's a great question, and obviously, I'm happy to be very open
Yeah.
about how I got into Bitcoin. Um,
Mm-hmm.
so I've always been interested in investments and trading, right? So I look at trading opportunities and try to see where I can grow my portfolio. And in 2016, sorry, yeah, in 26 late 2016, early 2017, because of the massive appreciation of Bitcoin prices, there was a lot of mispricing globally, right? So you
Mm-hmm.
can actually buy Bitcoin in the US, sell it in Korea for an immediate 40-30% gain, right? So that's how I got into the space. I started with arbitrage trading. And then as I looked at the technology a little bit more, I realized, this one can actually solve a lot of pain points in the remittance space in the Philippines. And so, if the central bank was supportive of this, then it makes sense to create a truly liquid exchange. Fast
Mm-hmm.
forward, I also thought like, okay, blockchain technology itself. What if I can combine uh, a traditional financial security, the underlying instrument, uh, but in token form? That can also solve a lot of the investment penetration pain points in the Philippines, right? So that's how I kind of thought about it. And when I saw that there was regulatory opening for these things, that's when PDAX started.
That's a pretty from just trading and now you started the business. That's a quite a huge leap, and then I'm pretty impressed. Okay, and then I guess everyone's obviously learning about Bitcoin right now. So let's go back to the fundamentals of Bitcoin. And I think one of the reasons that many of the proponents of Bitcoin cite why people should consider this as an asset is because it's decentralized. Can you expound on why decentralization is important? What does that mean?
Mhm.
Because that seems to be like a
Right.
big word, right?
Right. So that's
Mm-hmm.
a great question. And a lot of the confusion around what Bitcoin is because you also get different accounts from different people, right? So
Yeah,
so when you talk to a technologist and you say Bitcoin is decentralized, the technologist will tell you, well, it's because the way the ledgers behave is decentralized, right? No one can
yeah.
control the network. But if you talk to someone like a monetary theorist, so like someone with a finance background, Bitcoin is decentralized because nobody controls the supply of Bitcoin, right? Supply and demand of Bitcoin. Nobody
Mm-hmm.
controls that, right? So currencies, for example, can be centrally uh, 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 removed of its value, right?
Mm-hmm.
Sorry, I was looking for the right word. Um, you can expand the monetary base of a country so much so that you actually end up taxing your own people and making your uh, and devaluing your own currency. Nobody can do that with Bitcoin. So when we say Bitcoin is decentralized from a risk perspective, it
Mm-hmm.
means that I am not exposed to any centralized or any one uh, local policy risk, local market risk, or even to an extent geopolitical risks.
Mm-hmm. Okay. That's a pretty good explanation. And I guess connected to that is really the advent of Bitcoin was because or as a pushback against banks, right? Back in the Asian financial crisis when people didn't trust as much the banks. Right now, obviously, the banks are doing well in this crisis. Coronavirus, just an off topic. They've did well. Credit, the cars are pretty good. And so I guess moving to the next question is one of the key features of Bitcoin is its scarcity, right? As you mentioned in your presentation, there will be only 21 million Bitcoins ever. And even the founder, Satoshi Nakamoto, cannot change that. My question is, how do you ensure that supply will be kept in check? How do you ensure that it's going to be 21 million people can just add 20 million again in the future when it's like $1 million, let's say?
Right. It's a great
Mm-hmm.
question. Okay. So even in the white paper of Satoshi, he
Mm-hmm.
also explained the risks of the Bitcoin network, right?
Mm-hmm.
And one of those risks is called the 51% attack. What does that mean? 51% attack means if 51% of the Bitcoin nodes are controlled by one party, then they can
Mm-hmm.
change rules, right?
Mm-hmm.
How unlikely is that? So right now, the Bitcoin network has as much computing power as 400 Googles, right? So if you think about setting up 200 Googles worth of computing power, the incentive to hijack Bitcoin probably is no longer there.
Mm-hmm.
Um, so that's so barring anything of the sort, the 21 million cap is likely to stay in put. Um, what can change that? Okay, if miners, like
Mm-hmm.
the ones administering the nodes, suddenly decide that you know what, the cap should disappear, it will take a very decentralized approach to
Mm-hmm.
for the miners to vote and decide to support another instance of Bitcoin that doesn't have the 21 million cap. But
Mm-hmm.
get this, like that has happened before, and it's called a fork, right? So Bitcoin forked into Bitcoin and Bitcoin Cash, right? It doesn't really kill the original, or in that case, it didn't kill the original Bitcoin instance.
Mm-hmm.
So even if we have another fork, probably Bitcoin will still exist and it'll still be kept at 21 million.
Okay. Thank you. We have a lot of questions, I guess, and this is really simpler questions of how do you open an account or how do you trade Bitcoin? I guess we can start. We can go
Sure,
back
sure.
there.
Uh,
Yeah.
so it's so easy to trade Bitcoin peer to peer, right? Like
Mm-hmm.
obviously, you can just uh, you don't even need to open an account elsewhere. You just need to download a Bitcoin wallet and then buy from somebody. But that's also a very risky thing to do because there are still a lot of scammers will tell you that they can sell you Bitcoin. You deposit your money and then they disappear, right?
Mm-hmm.
So what's the safest way to buy Bitcoin? You go to the licensed exchanges.
Mm-hmm.
There are a number of BSP licensed exchanges. Uh, in the case of PDAX, I would say that we were reviewed in the same way that a financial institution, like a bank, was reviewed and accredited. So you can go to exchanges like these. No? Open an account.
Mm-hmm.
Then they would have options for you to put in Philippine pesos, and then you can place your order for Bitcoin. It's super easy, and I would say, yeah, very very straightforward if you go through regulated parties.
Okay, thanks. One of the pushbacks actually for a lot of investors or retail clients that we have, especially when they saw that the Bitcoin price went super strong in 2017 and then subsequently went down super hard, is this a scam, right? So is this a scam and is Bitcoin safe and legal for you?
That's a great question, because
Mm-hmm.
everyone's afraid of a bubble, right?
Yeah.
Like,
Mm-hmm.
I don't know what it is. It's moving really, really fast. It's going up. I don't want to
Yeah.
miss out. I'm gonna jump in, but then what if it crashes? Okay, we're all afraid of bubbles, and
Mm-hmm.
bubbles really are just a way of saying we're not exactly sure how to value the instrument that's going on that meteoric rise.
Mm-hmm.
Okay, so obviously that concern is very well founded. Um, but I guess uh, there is the there is market activity, obviously, to every instrument that we cannot adequately capture,
Mm-hmm.
right? But we don't call the underlying instrument a scam, right?
Mm-hmm.
So I would say scams are when you have uh, an instrument that um, uh, is being manipulated for like some illicit purpose, right? But Bitcoin itself is being seen as valuable by traders either for speculative purposes or for trading. So I would not say that it's a scam, but it is very volatile, right?
Mm-hmm.
So if you want to buy
Definitely.
Bitcoin today, like let's say at $18,000, be prepared for it to go down to 5,000, 4,000 next month, and then the month after that it can go up to 30, 40, 50,000. Now what I would attribute that to is that Bitcoin is still having to mature as an asset class, right? What do I mean by that? I keep saying that. I'll
Mm-hmm.
try to like um, illustrate uh, an instrument before it reaches quote unquote maturity is still trading in niche markets, right? It trades
Mm-hmm.
this small market here, small market here, small market there. Okay, you have buyers and sellers, like let's say a 100,000 buyers and sellers. As the instrument matures, meaning that people are looking at it and giving their views on it, right? Uh, Prices tend to become a lot more stable, right? So as we go from 100,000 traders of Bitcoin to, let's say, 100 million traders of Bitcoin, obviously there's going to be appreciation in price there because
Mm-hmm.
Bitcoin is scarce. So all the demand action will just, push probably prices upward. But what it also does is it creates a more natural baseline for people to support the price of Bitcoin. So you should see some more stability as the instrument matures.
Okay. I guess a related question to that, and I guess you kind of answer that question, is how do people, especially those who are super proponents of Bitcoin, value Bitcoin? And you mentioned there are speculators, there are people who are going to hold it for the long term. So, do they use fundamental analysis or tactical analysis or something new to
Mhm.
value cryptocurrencies?
Because when crypto trading first started, uh,
Mm-hmm.
it was probably the most ideal instrument for technical analysts because uh, I don't even know how to say this, but it was unconstrained by fundamentals, right?
Mm-hmm.
Which
Yeah.
is another way of saying it doesn't mean anything, right? So
Mm-hmm.
so it was very faithful to self-fulfilling analyses, right?
Mm-hmm.
Um, uh, but now, if you ask me, what is the value of Bitcoin? I would say, well, what is the value of a scarce instrument that it can buy and sell pretty much anywhere, that I can hold without being reliant on a third party, and that can insulate me from economic risks globally? I would say that's pretty valuable, right?
Mm-hmm.
Because the global market environment is very uncertain. And if I want to preserve my purchasing power or my wealth, then I would want that instrument.
Okay, I
So
guess that's
fundamentally,
a
that's how I look at it. Yeah.
yeah, definitely. And I guess after talking about the fundamentals of Bitcoin, now we can talk about it. And for example, one of our questions is what's the purpose of Bitcoin in a retail investor's portfolio, right? What would you say is the the best way to figure that out? Because a lot of our viewers right now are retail clients, and
Right.
then we would want they would want to have some measure.
Right. So obviously, this is not necessarily investment advice.
Yeah, yeah.
We're not looking at individual portfolios, but generally speaking, right? Like you always should have a diversified portfolio, right? Uh, if you put your entire wealth in Bitcoin today, that's probably super ill-advised, right? Have
Mm-hmm.
a diversified portfolio, and the question now is like, why would I put some allocation into Bitcoin, right?
Mm-hmm.
Um, obviously, there is a massive potential for Bitcoin to protect you against inflationary risks, right? Or even the fear of inflation um, can cause flight towards something like Bitcoin, of which you can stand to benefit. Uh, but you can also make the same argument for gold, right? Like, okay, gold also protects me from these risks, but without the uncertainty of what gold is. True, uh, but you might also say that Bitcoin has probably asymmetrically more upside, right, than gold because gold is super mature. So, for example, if I allocate 2% of my portfolio to Bitcoin, which is what Paul Tudor Jones did, uh, and it triples in value in a year, then I'm already getting a plus 6% on my portfolio, and we're only talking about 2% of my holdings, right? So that asymmetric potential, I think is super attractive in a diversified portfolio, because it's also very unlikely that Bitcoin will go down to zero.
Mm-hmm.
Probably in 2016 there was that chance, or maybe a bit earlier, but
Mm-hmm.
today highly unlikely, I would say.
I guess they would say that time is the best filter, right? As Bitcoin matures and then I guess survives year after year, the probability of it going to zero is it's getting slimmer. Um, I guess one more question is that related to we ask about the fundamentals of Bitcoin. We ask about where to buy Bitcoins, and then we ask how to value it. Then the next question also is who are the institutions in the Philippines right now that regulates or protects the interests of investors in this space?
Right. So,
Mm-hmm.
from a regulatory standpoint, it's primarily the BSP, right?
Mm-hmm.
So, the BSP has a set of rules that cryptocurrency exchanges must comply with regards to consumer protection,
Mm-hmm.
AML, and cybersecurity. The SEC, for its part, is also regulating around the space uh,
Mm-hmm.
in regards to tokens that behave like securities. Bitcoin itself doesn't look like a security, right? And
Mm-hmm.
jurisdictions around the world have kind of um, uh, arrived at that conclusion. So these are the two bodies that monitor institutions like PDAX.
Okay, thank you. I guess one last is like I have this feeling that or observation that when there are new technologies that changes the world or change the world, people usually overestimate the impact of that technology in the near term and underestimate it in the long term. Like everyone overestimated tech stocks back in the tech boom,
Mhm.
and there's a subsequent crash. And I guess fast forward 20 years, tech stocks now are the biggest companies in the world. Similarly, I think that partly was true in 2017 for Bitcoin, right? There was an overestimation of the impact. But I guess moving forward, 20 years, what do you think will be the impact of Bitcoin, the blockchain technology, and other cryptocurrencies in our society?
Mhm. So
Similar with what
I would
happened to tech
actually
stocks.
decouple them. No? Like
Mm-hmm.
Bitcoin, I think stands on its own, right?
Mm-hmm.
The old narrative for Bitcoin will run its own course, just as
Mm-hmm.
blockchain technology and its applications to commercial use will run its own course. To your earlier point about actually, I like that. Like we underestimate advances, and then later on sorry, we overestimate them at first, and then later on we underestimate. I
Yeah.
think it's just a function of like what it takes for new technology to be adopted, right? Because
Mm-hmm.
for new technology to be adopted, you're really dealing with chicken and egg forces, right? You need a
Mm-hmm.
perfect storm of acceptance among the ecosystem to support it, right?
Mm-hmm.
So you actually don't see the ecosystem supporting it until it's too late, right? In
Yeah.
other words, it happens super gradually until all of a sudden it's there, right? So, which is what I would say is the case for something like Bitcoin, right?
Mm-hmm.
It started as just people who play Magic the Gathering, also exchanging Bitcoin on the side, or cypherpunks who were like the technologists who pass Bitcoin to one another, and then eventually you have J.P. Morgan publishing analyst research on Bitcoin as
Yeah.
its Goldman Sachs, right? Uh, I think Bitcoin's reached the point that it is primed for maturity, right?
Mm-hmm.
Because you're also seeing a lot of institutional money being put to investing in infrastructure to support that, right? Like
Mm-hmm.
I mentioned earlier, the Standard Chartered, and in the U.S. like Northern Trust, Bank of New York Mellon, uh, Brown Brothers, these are global custody shops that are devoting resources to creating digital asset custody. Prime brokers are coming up also, right? Um, Banks are supporting the exchange of Bitcoin for fiat. So it's probably more you're seeing it already, right?
Mm-hmm.
Nandun na tayo sa part na we're about to hit it all of a sudden. That's my
Mm-hmm.
opinion. With
Mm-hmm.
blockchain technology, it's a different scenario, I would say.
I guess it's the best time to end with that answer. Thank you, Nichelle, for all the time that you gave me and all the listeners and audience, especially for your insightful answers. If you have further questions, it's for the audience and would like to learn more about Atrum's funds and strategies, please get in touch with your relevant Atrum manager. You can visit us, Atrum. Our website is www.atrum.com.ph, and you can visit PDAX at pdax.ph. Finally, we would like to invite you to join Atrum's new official Viber community group, hashtag AtrumPH community, to stay updated on the latest announcements, advisories, and reminders. You can scan the QR code or visit this link, bit.do/atrum.ph. Okay, that's all the time that we have for this webinar. I'm super glad to be here again to learn from Michelle and facilitate the discussion about this new asset class. Definitely, this is an exciting topic. And as usual, please manage your risk if ever, whatever you do, and returns will follow. Again, thank you, Michelle, and our audience. We appreciate you taking the time to join us today.
Thank you
Lastly,
so
please
much.
and thank you, Michelle. Super exciting, and we've learned a lot today. Lastly, for our audience, please answer the survey after. Your feedback is always valuable to us. On behalf of Atrum, we would like to wish you and your loved ones good health and safety. Merry Christmas and Happy New Year. This will be the last webinar this year, and we hope to see you again next year. Thank you.